Being rich does not mean you need to have a lot of money in your bank account. Real wealth is actually built based on your investment and the assets. So, welcome to another segment of intellectual brainstorming and academic excellence. My name is David Oni, and my YouTube channel is David Oni Wiz. Now, today we're going to look at why the rich are always getting richer, the secret to why the rich are actually getting richer in the society. You see, when you're talking about wealth, it is not actually measured by the amount of money you have in your bank account, because you may actually have money in your bank account and that money is just there without what creating value for you. That is, you are not putting that money into work. But you say that you are rich or you are wealthy when your money is actually growing for you, or your money is actually working for you. So real asset or real wealth is actually built through your investment and your asset. It's also important to note that you cannot build wealth based on your salary, because your salary, except you actually divide that money into savings, spendings, and what an investment, then you can actually what put your money into motion for you to actually work for you. So your salary cannot create wealth for you, except your salary is being portioned into an area of what of a investment. Now, real wealth actually comes from an investment and asset built over time. What we're saying here is that when you actually wanted to create wealth, or you wanted to create a financial prosperity or stability, it is something that you have to build over a period of time. And like I always say in my lecture, we talk about period of time like 5 years, 10 years, 15, 20, 30, 40 years. It is something that can actually be transferred from one generation to another. So you can actually transfer your wealth or your money to your children that are yet unborn, or your generation of children that are yet unborn. So it can be transferred from one generation to another. Just like when you say there's what we call a poverty tree. That is when you can transfer poverty from one generation to another if drastic what effort are not being put into place. Now, wealthy people create their businesses, or they build their businesses through what we call debt, or equity. Now, what do I mean by debt? For those that are actually rich, you discover that most of them actually what go for a loan, or they actually collect money in form of a debt, or they actually raise what I call a equity to actually build their their investment portfolios or their wealth. Now, when you talk about wealthy people, they create their business or build their business through what we call debt or equity, that is through investment from other investors. What do I mean by that? You see, when we're talking about this, what we're saying there is that for them, for the rich or for the wealthy, a lot of them have to wait for so many years for them to build up their business to the level at which they actually wanted it to be. Most of them, they actually take time, because for you to actually be able to build wealth, it is not something that you can actually create in a short period of time. It is actually something that can take a lot of time. I mean, a lot of years for you to actually create such a thing. So for the wealthy class, what they do is that they build their business through what we call debt or equities, by by investing, or they actually involve other people to actually invest in in their vision. So when they invest in their vision and with their own vision coupled together, and with the money they also get from other investors that believe in what they want, their their productivity or the product they wanted to offer to the outside world, you will discover that business can actually transform from nothing into something. Now, when the value of their investment goes up, they do not pay tax. They do not pay tax, because most of them are also paid with a stock option. What do I mean by this? You see, when the value of their investment, that is when they have actually invested their money, and the business is actually creating value at the end of the day, most of them are not usually paid tax, because in most cases, when most companies like what we're talking about now, they go on the on stock exchange, or they sell their shares to the members of the public, you discover that most of these CEOs do not pay tax because they are not actually paid. And that is why for the wealthy class, a lot of people see them as being wealthy, but their money is not in what? In physical form, but in paper form. I will still explain that. So most of them are not paid. They are actually, most of them are paid what we call the stock options, where they acquire more shares. Instead of them to be paid money, they actually pay them what? In share value, where they acquire what? More shares, and they purchase what? And they also purchase more shares. So they also do what we call the cash out refinance, where they use the value of their investment to obtain loan from the banks, or they can also use the value of what? Of their investment by buying more shares. So most of them, in most cases, because of the profile, or because of what they have been able to make up over the years, which is not in form of what? Of physical cash, but paper money, which is built on their profile, most of them can actually what? And go to a bank and actually what? Negotiate for a loan. Can you see now? So that's what I mean by what I call a cash out refinance. Like what most of them do is that you know for example, let's use Mark Zuckerberg for example. This guy is very rich. He has a lot of stock investment and the rest of them. According to what they said he's worth about some billions of dollars and the rest of them. But that money is not what you can actually see. Do you understand that? You cannot actually what? See that money. So because of the fact that they have paper money in form of what? Of equities, what they can do is that they can actually go to a bank to what? To sell their profile. Banks know that these guys are very rich, that he has some money like let's say for example, 250 billion naira in his account. So he can walk up to a bank and say, "Bank, I need loan." So it's not his physical money at that point in time, because why? He is building or taking that loan to what? Based on what? On his profile, based on what he has in what? In his paper money, in form of what? In form of a stock. So the bank will give him the money based on what? On a negotiation. They do what we call a cash out refinance. That is, they use the value of their investment to obtain what we call a loan in the bank, and they also sell some of the values of their shares. So when they are doing it, they are creating money for themselves. But averagely, when we see them in the public, we say, man, these guys are very rich. These guys they have a lot of money. They are very, rich. They are very wealthy, but they don't have the physical cash. What they have is what? Is a stock value. So most of them in these cases, they use their profile or their paper money to actually obtain a loan in the bank, or they can sell the value of their shares to get more money for themselves. Can you see something like that? So when you say Bill Gates or Mark Zuckerberg or any of these guys are very, very rich, most of them, because of the fact that they trade on stock, you cannot actually see that money because it's paper money, which you can actually see with physical form. But they can create what? Wealth from themselves when they set the value of their shares, or they use what? The value of their shares, which they are able to build over the years, to obtain money from the bank. Now, they only pay taxes. They only pay taxes. Do you understand? They only pay taxes. The only time they can pay taxes is when they get paid in what? In form of what? Of a income. In form of what? Of a income. So this principle applies to us on someone like a Mark Zuckerberg, like a Elon Musk, and a host of most of these guys. Now, let's now talk about the principles to wealth creation. The principles to wealth creation. Now, when you talk about wealth creation, there are three principles to wealth creation, which I'm going to quickly explain because of our time. Number one is that wealth is created through what I call a investment. Number two, you need a long-term vision, such as years and decades, to create wealth. And number three, it is built through what we call diversification of investment, and putting in all your efforts together. Those are the three principles of wealth creation. Now let us go to the first one, which is what wealth is created through the Investment. By now, I believe that you know what I mean by investment. What is an investment? Investment is when you put your money into something in which you expect a reward or a profit for what you have put into that thing. So when you do that, you have what we call what investment in a simple down in a simple layman form. Now, you see, um, you do not need to become somebody like Mike Zuckerberg or Elon Musk or this Warren Buffett before you can say that you are actually wealthy. You can also create your wealth through investment, just like most of these guys. But you don't need to be like as rich as them before you can say that you are actually rich. Now, for you to create your investment. Wealth is actually what? Created through investment. You get it now? Wealth is what? Is created through what? Investment. And you can create wealth either by building an asset or buying an asset. You see now? So when you see that wealth is created through investment, it means that you can create wealth by buying an asset or building an asset. So I will quickly explain that one now because you say, what does it mean by buying an asset and building an asset? Now, when you say you you build an asset, you have what we call infinite return on what on the investment. You see, you have what we call a infinite return on investment. That is when you build an asset. You understand now? So when you say someone is building an asset, it means that what it entails building a company into a bigger business empires. So this makes you what we call a chief executive officer, which is the CEO. So you have 100% ownership of the company, and it entails what a lot of risk. So if you are an entrepreneur or a business owner, then you are building what we call what an asset. You get it now? You are building what we call an asset. So you can also sell shares to the public as the company actually grows. Now, how do you sell your shares to the company? As your company is metamorphosing or changing from lower or from a smaller background into something big. In most cases, you can go PLC, public limited liability companies. By company limited liability companies, that means that you are giving the privilege of selling shares to members of the company. So that makes you a co-owner of the company when you get to this particular stage. So at this particular point, the company does not belong to you only, but belongs to a group of people in which you have some percentage of shares in that particular company. Can you see that now? So that is it. So you can build an investment or wealth through what we call an asset. That is, you started from the point at which you are the owner of the company, and as the company begins to grow, you begin to sell shares. What I mean by when you buy an asset, because there are two types. I said when you build an asset, you are the owner of the company. Do you understand that? You are the owner of the company, you are the CEO. But what does it mean by when you buy an asset? So buying an asset and building an asset is not the same thing. So when you buy an asset, you have a 0% ownership of the company, and what you get at the end of the day is going to be based on the amount of money you have actually invested into the company. You understand? In other words, you are one of the shareholders of the company. So you can invest in stock, you can invest in equities, you can invest in the rental estate, you can invest in mutual funds, you can invest in startup, you can invest in the real estate or rental estate or rental property estate. Do you get it now? So you are buying an asset, not building an asset. So when somebody builds an asset, he is the owner of the company. But when you are buying an asset, you are a co-owner of the company because you have a particular percentage of share in that particular country, or in that particular company, in that particular company. Now, let's go to the second one. You need a long-term vision. Now, building wealth or creating financial prosperity is not something that can be done within 1 year, within 6 months, within some months. It is something that has to be, it's a journey. It's a journey of sacrifice, a journey of sacrifice, the journey of decade of sacrifice. It is something that takes a long period of time to actually grow that business into a business empire. Now, you see, what do I mean by a long vision? A lot of people believe that for you to be able to create a wealth or build money, you have to, it's something that can take a short period of time, provided you have money and the rest of them. No, it doesn't work like that. We have seen companies that were started today and tomorrow they are gone. So when you talk about building wealth, it is what is a long-term vision. It takes a lot of time, patience, perseverance, hard work, dedication, transparency, pragmatism, innovation, invention, and the rest of them to actually build that company to what you actually wanted it to be. Like Bill Gates, like Mark Zuckerberg, like this guy Elon Musk, and the rest of them. It took them, some of them started in 2003, some of them started in what in 2004. Do you see? They started in 2003, some of them started in 2004. Now, imagine 2003 and to 2024. That is 21 years. Do you see now? For Bill Gates, for Mark Zuckerberg, for Elon Musk to build Tesla to what it is today. So it started a long period of time ago. So when you see a wealthy man or people that are very rich, it's not something that they started there just yesterday. They have taken the venture over a long period of time go. Do you understand now? So it takes time to actually what invest your money. It takes decades. So it's a decade of sacrifice. It's something you have to put in your effort, your energy, your time, and everything into the business for it to actually grow your business into what into an empire where you can actually create a what called wealth for yourself. Now, what's the third one? I said it is built through diversification. What do I mean by diversification? We always advise people that if you want to go into investment, it is not right or good enough for you to cast all your eggs in one particular basket. You need what we call diversification because anything can happen at any point in time. For example, if you actually invested your money into speculative investment where you are buying shares individually or you're investing in a company directly, as opposed to indirectly, there's every possibility that your money can go down the drain. Anything can happen at any point in time. Do you understand? Anything can happen at any point in time. And that's why it is very good for you to invest your portfolio into passive investment where you have what an indirect investment. That is, you are not the one trading directly by yourself. You are not the one forecasting directly by yourself. You are not the one doing all the major intellectual work by yourself, which requires what we call financial education. But somebody is out there doing everything for you, and you are getting something in percentage back at the end of the day. Do you get it now? So diversification of investment is very crucial to wealth creation. Do you understand now? So you must not put all your effort into what into only one business portfolio or investment portfolio. You must rather what diversify it so that if one is not working, the other one can actually work. Now you can diversify into money market fund, you can diversify it into rental estate, you can diversify it into mutual funds, you can diversify into startup business, you can diversify into equity funds, you can diversify into what we call stocks and the rest of them. You can diversify into so many of them so that you can create a balanced financial portfolio investment for yourself. Do you get it now? So diversification is very, very important. On the other hand too, if you have a good financial education, if you are financially sound educationally in the area of finances, you can also put your effort into one particular thing that you believe so much in, and that it can create what wealth for you in the future. Now, who is an example of this? Mark Zuckerberg is an example of someone in this category. You will discover that Mark Zuckerberg does not invest his money into a diversified portfolio investment. Well, what does he do? He only puts all his effort into Facebook. And look at where Facebook is up to in this particular era now. From 2004, I think, to 2024. Look at the value of Facebook in the world today. Can you see? So You can either diversify or you put in all your effort into one particular, investment ideas that you believe in. Do you get it now? So there are two varieties. You can either diversify, or if you have the propensity, if you have the ideas, if you have the intellectual background, if you have the financial education, you can also put all your effort into one particular aspect of what of investment, like what Mark Zuckerberg did. The same thing applies to what, to Elon Musk. You understand now? Elon Musk is also a very good example of this. Look at what he has been able to transform Tesla from in 2003 or 2004 to what Tesla is in 2024. And today now, Elon Musk is the most richest man in the world. Can you see? Can you see now? So creation of wealth, or creating wealth, is not something that can be built within a short period of time. It is something that can be built over a long period of time. Look at from 2003 to 2024, 2004 to 2024, 20 years, 21 years that has taken them to build Facebook and what, and then Tesla. And this guy, they never give up. And look at the result today. Most people are buying shares into what? Into Facebook, into Tesla. Can you get it now? Into Elon Musk companies and into Mark Zuckerberg company. And look at the value of those shares in what? In the market today, in the stock market. Can you see now? So building wealth is what is true investment. Building wealth is true perseverance. Building wealth is true patience. The building wealth is through diversification. Building wealth is putting your all in all into what you believe in. Building wealth is by buying asset or building a asset. Can you see now? So the option is actually yours. So when you buy assets means what? You invest your money into mutual funds, equity trust funds, index funds, mutual funds, and S&P 500, Nasdaq, and and the rest of them. Then if you want to actually what, invest your money, individually, by buying, directly by yourself into individual companies, though it is risky and it involves for financial education, but the result or the consequence is also what, the profit at the end of the day might also be higher. But if you don't have the mind or the strength, or you don't have the financial education that can actually propel you in this regard, if you are actually going to what we call active investment strategy, that is actually better for you to go into what we call a passive investment strategy. Like me, because of my job and my busy schedule and the rest of them, I don't do active investment strategy. What I do is what is passive investment, a diversified portfolio investment. You get it now? Diversify into euro bonds, into dollar funds, into HALA funds, into mutual funds, into fixed income funds, into a lot of funds. You get it now? Buying shares and the rest of them. And through that, over years, you can actually create a wealth for yourself. So this is why the rich are getting richer every day, every time. The value of Elon Musk's wealth is going up every day. The value of Mark Zuckerberg is going up every day, because they took their time over the years to build up their business empire. So on this note, we're going to end why the rich are always getting the richer. I hope you enjoy this topic video. If you actually have not subscribed to our video, please go and subscribe now. God bless you, our returning subscribers, and please don't forget to like our videos and also to share our videos to the outside world. God bless you all, and till we meet next time, I remain your humble, dedicated, innovative David Oni. My YouTube channel is what is David Oni Ways. Go and watch my videos. They are all there if you want to build wealth in 2024. I am building my way by the grace of God, and I want you also to build your wealth through perseverance, determination, hard work, and what, and dedication, and the what, focus. You can always get there. It is not always easy, but if you enjoy it, you always get to your promised land. Thank you, and God bless you all. Bye bye.